The steel skeleton of Indian capital, production, trade, and labor exploitation. The material reality of modern industrial capital rests upon a foundational element, steel. In the political economy of contemporary India, iron and steel production serves as the central distribution system through which state-led infrastructural ambitions and private capital accumulation are invested. While official narratives celebrate national capacity expansion, an examination of trade valuations, labor relations, and material metallurgy reveal deep structural contradictions within India's industrial matrix. The metallurgy of accumulation, production and capacity. According to data from the Ministry of Steel, India's crude steel making capacity has reached approximately 220 million tons per annum, positioning the nation as the second largest crude steel producer globally behind China. Total finished steel production stands at 139 million tons annually, alongside pig iron producing exceeding 7 million tons. Pig iron production exceeding 7 million tons. This output is bifurcated between two distinct regimes of production and labor exploitation. Primary producers. Large-scale conglomerates such as Tata Steel, JSW Steel, and the state-owned Steel Authority of India (SAIL) employ integrated blast furnace basic oxygen furnaces. These primary facilities produce the majority of high-value flat products, hot-rolled and cold-rolled coils. Secondary producers. Decentralized energy-intensive units utilizing electric arc furnaces and induction furnaces, powered by domestic sponge iron and scrap metal, supplying approximately 47% of national output, primarily non-flat items like thermomechanically treated rebars. This sector functions largely in the informal domain, relying on unorganized, low-wage manual labor. Sectoral allocation. How capital employs the metal. The distribution and physical consumption of finished steel reflect the capital expenditure model of the Indian state. Tracking data from the Joint Plant Committee indicates that domestic finished steel is absorbed across key end-user sectors. Building and infrastructure, 60 to 65%. The primary consumer. It relies on thermomechanically treated rebars and structural sections to support urban expansion, real estate speculation, and state logistics corridors. Capital goods and heavy engineering, 10 to 12%. Employs forging quality carbon and alloy steels for industrial machinery fabrication. Automotive and transportation, 9 to 10%. Utilizes high-value flat steel, including high-strength cold-rolled sheets and galvanized auto body panels. Energy, oil, and gas, 5 to 7%. Consumes seamless tubes and electric resistance welded line pipes for hydrocarbon extraction and transport. Railways and defense, 4 to 5%. Requires specialized metallurgy, including head-hardened rails and high-tensile armor plates. Sectoral steel consumption breakdown. Building and infrastructure, 60 to 65%. Capital goods and engineering, 10 to 12%. Automotive, 9 to 10%. Energy, oil and gas, 5 to 7%. Railways and defense, 4 to 5%. Consumer durables, 4 to 5%. Trade valuation and the net importer paradox. Despite substantial domestic raw material wealth, specifically high-grade hematite deposits extracted from the Odisha-Jharkhand belt at significant social and ecological costs, India faces a structural trade paradox. Reports from the Joint Plant Committee confirm that India transitioned into a net importer of finished steel. Import dynamics. Finished steel imports rose to over 8.3 million tons annually, valued at approximately 68,193 crores or 8.2 billion US dollars. These imports consist of high-value flat items such as electrical steel sheets, specialized alloy plates, and cold-rolled coils, sourced from South Korea, Japan, and China. Export dynamics. Exports stood at 7.49 million tons, valued at roughly 59,157 crores or 7.1 billion US dollars, comprising lower margin commodity products, standard hot rolled coils, and galvanized sheets, bound for Europe, the UAE, and Southeast Asia. The valuation deficit. This dynamic generates a trade deficit in finished steel exceeding 9,000 crores annually, illustrating India's dependence on foreign technological capacity for specialized metallurgy. The political economy of labor, industrial accidents, and extraction. A purely trade-centric analysis masks the human toll embedded in steel production, where worker mortality is routinely treated as an acceptable overhead cost. Casualization and fatal explosions. The reliance on a two-tiered labor structure directly compromises plant safety. Contract laborers perform high-risk maintenance without structural protections. An investigative report by Ground Zero into the 2018 disaster at SAIL's flagship Bhilai steel plant documented how 14 workers, including contract maintenance workers and firefighters, were burnt alive during a gas pipeline explosion while deblanking a flange. Trade union investigations revealed that post-accident statutory safety recommendations had been ignored, while contract workers were deployed to high-risk zones without basic statutory protections. Extreme hazards on the shop floor. The physical precarity of the shop floor was again demonstrated in June 2026 at the state-run Visakhapatnam steel plant, as reported by The Hindu. A ladle carrying 150 tons of molten steel at 1,600 degrees centigrade exploded, spilling superheated liquid metal across the steel melting shop floor. The blast killed 8 workers on the spot, including contract laborers Ramana Trinad and N. Appalaraju, and critically injured 6 others with severe burns. Secondary sector informalization. In unorganized sponge iron units, re-rolling mills across Chhattisgarh and Odisha, informal labor absorbs the shocks of volatile scrap metal and electricity prices. When electricity, tariffs, or coal prices surge, mills cut overhead by accelerating shift rhythms and dismantling safety protocols, leading to unrecorded limb amputations and burn injuries that never enter official statistics. extractive violence, and coking coal vulnerabilities. While iron ore is mined from the forest regions through the displacement of indigenous communities, India lacks domestic high-grade metallurgic coking coal. Consequently, domestic blast furnaces remain dependent on importing over 70% of their coking coal from Australia and Russia, exposing the domestic valuation chain to external price variability. Ultimately, the evolution of India's steel industry illustrates how intense physical expansion, resource mobilization, and deep technological partnerships can serve as catalysts for modern globalization. By anchoring critical foreign supply chains in high value technologies, the sector has effectively integrated India's economy into global supply chains, fostering more reliable, trustworthy international relations and unlocking expanded cross-border trade opportunities across complementary and critical industries.